welcome back to Purvike Pravachan. Okay, so firstly, what does SWOT analysis basically mean, right? SWOT analysis basically studies the positive and the negative impact of XYZ factors on the Indian financial system. It has two factors, internal and external. Internal basically involves strengths and weaknesses, external is opportunity and threats, okay? And under strength, we have four subpoints. Starting with the first one, channelize capitals towards productive purposes. Basically, banks collect savings from the people. The funds are given as loans to businesses or industries, helps in investment and economic growth. It basically acts as a link between the borrower and the lender. The second thing is efficient resource allocation. Financial system direct monies to profitable sectors, helps in proper utilization of funds in the economy. Interest rate guides the investment decision, encourages productive investments. So basically, this is again the same thing which is telling you that basically all the money of yours is not to be kept inside your home, it is to be used in some productive purposes. And at the same time, how do you choose which is the best investment is in regards to the interest rates, okay? The next point is risk management, which is done through insurance. Financial market helps to reduce financial risks. Investors can invest in different assets to spread risk. Insurance service provides protection against losses. Liquidity helps investors to quickly buy or sell the asset. Liquidity basically refers to anything that can be converted into money quickly, right? Next is promotes capital formation, encourages people to save money. Savings are converted into funds are used for industries, infrastructures, and development projects. This increases economic growth. Okay. Next up, we have the weaknesses. The first weakness is lack of coordination between financial institutions. Many financial institutions work separately. Proper coordination among them is lacking. This creates inefficiency in the financial system. Basically, there's no coordination. Second is monopolistic market structure. This basically monopoly means somebody who dominates the place. It's more like there are a few financial sectors which dominate the places and the rest do not. So that also affects, and that's also one of the weaknesses. Some institutions dominate the market. Examples: LIC, UTI had major control in certain sectors. This reduces competition and efficiency. Next, dominance of development bank. Industrial financing mainly depends on development bank. These banks depend heavily on sponsors for fund. Limited growth of efficient limited growth of efficient capital market. I don't know, but yeah, just remember the point. Next point is lack of institutional investors. It basically means that in India there are very few large investors who invest into the corporate sectors. This therefore reduces the market growth. The second is neglect of small and new enterprises. Basically, the small enterprises find it really difficult to raise the finances at easy and a cheap pricing that becomes very difficult for them. Therefore, this slows down the entrepreneurial growth. The next is opportunities of Indian financial system. First is demographic dividend, which basically refers to India has a huge population of youth. So now what happens is there is a demand for financial products. The demand for financial products is increasing. This therefore creates growth opportunities for the banks and the financial institutions. Next is technological innovation. Technologies like AI, blockchain, and big data improve services. Digital banking and online payments are growing fast, helps expand financial services. And then we have international integration. Basically, the Indian companies can now borrow funds from the foreign sectors also. Indian financial markets are becoming globally connected, helps sharing of technology and best practices. Companies can raise funds from international markets too. Now we have the threat. So the first threat is cyber hacking, okay, which is basically hacking of a system and then the information gets leaked out types. Illegal access to computer systems and networks can lead to the theft of banking and customer data, threatens digital financial services. The second point is phishing. Phishing is basically those fraud emails Joe you people receive, and then when you end up clicking that, they ask you for a OTP, and then it's more like those lottery and stuff, like तुम्हें लॉटरी लगेगी अगर तुम ओटीपी डालोगे, ये वो टाइप्स, those things. Fraudsters, I don't know, fraudsters trick people into sharing passwords and OTPs, leads to bank frauds and online scams, a major cyber threat in the financial service. Next is cryptocurrencies, can be used for illegal activities and money laundering, difficult difficult for authorities to regulate fully, increases chances of fraud. The last we have is data theft, which is basically the leaking of information of customers' bank detail, personal detail, and financial data may be misused if all of these get leaked, reduces customer trust in the financial institutions. Okay, next we have the regulatory bodies of India, and in that, the first one is RBI. RBI was basically established in 1935 under the RBI Act 1934. It is the Central Bank of India. It regulates and controls the banking system in India. It maintains monetary stability and controls inflation. Now, the inflation is controlled through quantitative and qualitative methods such as CRR, SLR, moral suasion, etc. And then it issues and manages the currency notes. It acts as a banker to government, banker to bank, and supervises all the commercial banks, manages foreign exchange reserves, ensures stability of financial system. Now I have just written these points, whatever I felt were very much required. Now you can also add up details. If you know what does banker to bank mean, it's basically that if it is the head of all the banks, right? So all the commercial banks come under it, something like that. So you guys can actually get into the detailed explanation from the textbook or chat gpt. Again, I have just given up the main points and what I feel is necessary. Next, we have SEBI. SEBI was established in 1992, regulates security market in India, protects interest of investors, prevents insider trading and market manipulation, regulates stock exchange, broker, mutual funds, and merchant banks. It ensures transparency and fair trade practices. So this basically regulates the security market. The above one was basically about banks. And then we have the Insurance Regulatory and Development Authority of India. This was established in 1999 under the IRDAI Act, IRDAI, and regulates the insurance industries in India, protects the interest of policyholders, grants license to insurance companies, regulates life insurance, general insurance, health insurance, and you can write different like fire insurance, this, that, etc. Ensures financial soundness of insurance companies, ensures proper functioning of the insurance sector. Okay. Last, we have the Pension Fund Regulatory and Development Authority, which is PFRDAI. Oh, I forgot. Just check that on Google. But yeah, it's called Pension Fund Regulatory and Development Authority. It was established in 2003. It regulates the pension sector in India, supervises the national pension system, protects the interest of pension subscribers, ensures proper management of retirement savings. It's called PFRDA. Yeah. Ensures proper safety and growth of pension fund. Okay. So the first one was about the banks, the second one is about the security exchange market, the third one is about the insurance, and the fourth one is about pension. And yeah, I'll see you in my next video. Last two more topics are pending, so we'll get done in the next part. Bye bye.